Hi everyone, today we'll be going over accounts, February-March 2021, paper 2-2, question number 1. This is structured paper 2, which consists 4 questions, 2 of 30 marks and 2 of 15 marks, and we are also given a time limit of 1 hour 30 minutes. Since question number 1 is of 30 marks, we will be attempting to solve this question under 30 minutes. So without any further delay, let's get started. Faraz, Javed and Leah were in a partnership, and their agreement included the following terms. Interest on drawings to be charged at 5% on total drawings for the year, interest at 12% per annum to be provided on fixed capitals, and Javed to receive a salary of 9,000 per annum. Remaining profits and losses to be shared in the ratio Faraz, Javed and Leah 4:3:3. So out of 10 parts of the profit, 4 parts belongs to Faraz, 3 parts belongs to Javed, and 3 parts belongs to Leah. Alright, then we are also given the following information regarding the opening balances of capital accounts and current accounts, as well as the total drawings for the year ended 31st December 2020 for all 3 partners, Faraz, Javed and Leah. Okay, let's have a look at our first question. We're also given profit for the year ended 31st December 2020, and this is before appropriation, which amounted to 31,500. So before appropriation just means that we haven't included any interest on drawings, interest on capitals, as well as the salary paid towards the partners to this profit. Now, for the first part of this question, we need to state 2 reasons why partnership agreements sometimes include a provision to charge interest on drawings. So interest on drawings is basically the interest that the partners need to pay towards the partnership for having taken drawings from the partnership account. Now, the major reason to include interest on drawings is to avoid partners from making excessive drawings, because that would result in a lack of fund in the partnership. And in order to avoid that, we charge interest on drawings sometimes in a partnership. Let's write it down. To deter partners from making excessive drawings. Alright, and then the second reason would be to reward partners who withdraw the least, because the partner having the least amount of drawings would also have to pay the least amount of interest on drawings, right? So that acts as a reward to those partners who take very minimum drawings from the partnership account. Let's write it down. To reward partners who withdraw the least. And this concludes the first part of this question. Now we can move towards the second one. We now need to prepare the appropriation account for the year ended 31st December 2020, and we're preparing this for the partnership of Faraz, Javed and Leah. Alright, so we will definitely start from our profit for the year, or profit before appropriation. And this was given above, so let's have a look. Our profit for the year before appropriation amounted to 31,500. Let's include this in our appropriation account. That is 31,500. Okay, and the very first provision of our partnership agreement was that there is to be charged interest on drawings at 5% on total drawings for the year. And like I said before, interest on drawings is something that the partners need to pay towards the partnership, which means that this would definitely increase our profit for appropriation. So we need to add the interest on drawings. Let's write it down. So add interest on drawings. And we were given the drawings amount for all 3 partners above. So that's going to be interest on drawings for Faraz, for Javed, and for Leah. And like we said before, that is to be charged at 5%, right? So let's figure it out. For Faraz, the drawings for the year amounted to 22,400. So that's 22,400, and we require 5% of it to be charged as the interest. So that's times 5%, which we can write down as 0.05. And this gives the interest on drawings for Faraz for the year ended 31st December 2020 to have the amount of 1,120. Now we repeat the same process for Javed and Leah. So for Javed, we can see that the drawings amounted to 17,200. So the interest would be 17,200 times 0.05. which results in the interest on drawings for Javed for this year to be 860. And now for Leah, we are given the drawings of 20,200. So that's 20,200 times 0.05, which gives the interest on drawings for Leah for the year ended 31st December 2020 to have the amount of 1,010. Now we need to include these three amounts in our appropriation account. Let's write it down. For Faraz, we figured it out to be 1,120. For Javed, it was 860. And for Leah, it was 1,010. So let's figure out the total interest on drawings for all three partners. That's going to be the sum of these three amounts, 1,120 plus 860 plus 1,010, which results in the total interest on drawings to be 2,990. Okay. Then the second provision under the partnership agreement was that we are charging interest at 12% per annum on fixed capitals. And we know that the partners invest capitals in the partnership, right? So as a return, the partnership will have to pay an interest of 12% on those fixed capitals. So fixed capitals will just be the balance on our capital accounts. For Faraz, it's 80,000, Javed, it's 60,000, and Leah, it's 50,000. So since partnership is paying this would definitely reduce the profit on appropriation, right? So we need to subtract the interest on capitals. Let's write it down. And that is less interest on capitals. And this is for Faraz, Javed, as well as Leah. Okay, let's figure out the interest on capital based on their capital accounts balances at 1st January 2020. Okay, now for Faraz, we can see that the capital balance was 80,000. So that's going to be 80,000. And we require 12% of it to be charged as the interest on capital. So that's times 12%, which we can write down as 0.12. And this gives the interest on capitals for Faraz for the year ended 31st December 2020 to have the amount of 9,600. Now we repeat the same process for Javed. We can see that the capital account balance is 60,000. So that's going to be 60,000 times 0.12, which results in the interest on capital for Javed for the year ended 31st December 2020 to have the amount of 7,200. And finally for Leah, we can see that the capital account balance is 50,000. So that's 50,000 times 0.12, which results in the interest on capital for Leah for the year ended 31st December 2020 to have the amount of 6,000. Now we need to record these three amounts in our appropriation account. Let's write it down. For Faraz, we figured it out to be 9,600. For Javed, it's 7,200. And for Leah, it's 6,000. Now let's figure out the total interest on capital. That's the sum of these three amounts, 9,600 plus 7,200 plus 6,000, which results in the value of 22,800. And remember that we are subtracting the interest on capital, right? So I'm just going to record this in a bracket indicating that this needs to be subtracted. Okay, then the third provision that we are given is that Javed is to receive a salary of 9,000 per annum, and the salary is to be provided by the partnership account, which means that this payment of salary would definitely reduce our profit for appropriation, right? So we need to subtract this. Let's write it down. So we need to subtract the salary to Javed, which amounted to 9,000. And I'm just going to record this in a bracket as well. And after this, we would get our residual profit or profit for appropriation. So I'm just going to write it down. And this is going to be profit for the year plus interest on drawings minus interest on capital minus salary to Javed. So that's 31,500 plus 2,990 minus 22,800 minus 9,000, which results in our residual profit to have the value of 2,690. And now we need to share this residual profit among the three partners. So let's write it down as well. Share of residual profit. And we need to share it among the three partners, Faraz, Javed, and Leah. We're given our profit sharing ratio above, and it was 4:3:3 for Faraz, Javed, and Leah. And now we need to share this residual profit according to this ratio, 4:3:3. So let's figure it out for Faraz. That's going to be the total residual profit of 2,690, and out of the 10 parts, 4 parts belongs to him. So that's times 4/10, which results in the share of residual profit for Faraz to have the value of 1,076. And for Javed, that's 2,690, which is the total residual profit. And out of 10 parts, 3 parts belongs to him. So that's 3/10, which results in the residual profit for his share to have the value of 807. And as we can see that for Leah as well, it is 3 parts out of 10, which means that her profit is going to be 807 as well, right? So that's for Leah. Let's write it down. For Faraz, it's 1,076. For Javed and Leah, that's 807 and 807. And the total for this would again result in 2,690 because we just divided this value among the 3 partners. And this concludes our appropriation account as well as the second part of this question. Now let's move towards the third part. We now need to prepare Javed's current account for the year ended 31st December 2020. Okay, so we will definitely start with the opening balance, which is on 1st January 2020. Let's have a look above. So we are given the current account balances as well. And we are preparing the current account for Javed, and his opening balance is 2,900 debit. So this just means that Javed owes 2,900 to the partnership rather than having to receive it from the partnership. So this amount will be recorded on the debit side as the opening balance on our current account. Let's write it down. That's balance BD with the value of 2,900. And in case of a current account, whatever value the partnership owes towards Javed will be recorded on the credit side, and whatever value Javed owes towards the partnership, that will be recorded on the debit side. Okay. And we already figured out the interest on drawings as well as the interest on capital, so that would definitely be recorded in our current account. Let's have a look above. So the interest on drawings for Javed amounted to 860. And like I said before, interest on drawings is something that the partners need to pay towards the partnership, which means that this value will be recorded on the debit side of the current account. Let's write it down. So that's interest on drawings, which amounted to 860. And drawings is also something that Javed owes towards the partnership, right? So he needs to pay that drawing back towards the partnership, which means that drawings will also be recorded on the debit side of the current account. Let's have a look above. And the drawings for Javed amounted to 17,200. Let's record this in the current account. 17,200. Next we have is the interest on capital. And the interest on capital for Javed amounted to 7,200. So interest on capital is something that the partnership pays to the partners for their fixed investment. So Javed would definitely receive this from the partnership, which means that interest on capital should be recorded on the credit side of the current account. Let's write this value. That's interest on capital with the amount of 7,200. Then let's have a look above again. We also provided salary to Javed, and this amounted to 9,000, right? And salary is something that Javed will receive from the partnership, which means that this payment of salary will be recorded on the credit side of the current account. Let's write it down. So that's salary of 9,000. Okay, then we also have the share of residual profit, and profit is something that the partnership will pay to the partners, right? And Javed will receive 807. So this will definitely be recorded on the credit side as well because he is receiving this amount from the partnership rather than paying it. Let's record this. So that's the share of profit, which amounted to 807. Now this concludes everything that is to be recorded in the current account of Javed, which means that now we need to move towards figuring out the closing balance. And we do not know whether the closing balance will be on the debit side or the credit side, so we need to figure out the total for both sides. So let's figure out the total for debit side first. That's 2,900 plus 860 plus 17,200, which results in the total of 20,960. And the total for the credit side would be 7,200 plus 9,000 plus 807, which results in the value of 17,007. So we can clearly see that debit side is the heavier side, which means that our closing balance will be on the credit side. So that's balance CD. Now we need to write down our total. And the total will be that of the heavier side. So that's 20,960 for both sides. Okay, and now here our closing balance acts as the balancing figure. And whenever we're trying to figure out the balancing figure, we just need to subtract these values from the total. And we already have the total of these values, which is 17,007. So we just need to subtract this amount from the total. That's 20,960 minus 17,007, which results in the closing balance in the current account of Javed to be 3,953. And this will act as the opening balance for next year. So we need to write it down as well on the opposite side. So that's balance brought down with the same amount of 3,953. And since the opening balance of the current account is on the debit side, this means that this is the amount that Javed owes to the partnership rather than receiving it. Okay, now this concludes the current account as well as the third part of this question. Now we can move towards the fourth one. We are given additional information. On 1st January 2021, Javed retired from the partnership, and it was agreed that on this date, Javed would keep some equipment for personal use. The equipment had a net book value of 15,400 and was to be transferred to Javed at a value of 13,000. So the equipment is definitely being revalued downwards, right? So let's figure out the revalued downwards amount. So that's just the difference between two values. So previously it was valued at 15,400 and now it's being valued at 13,000. Which means that it is being revalued downwards by the difference, which is 2,400. Okay. And then we're told that other non-current assets were to be revalued upwards by 24,000. Okay. Now we can figure out the total profit or loss on devaluation. We can see that this equipment was being revalued downwards, which is a loss on devaluation. But we can see that other non-current assets were being revalued upwards, which is a profit on devaluation. And clearly, the profit amount is higher than the loss amount, which means that overall, there is going to be a profit on devaluation. Let's figure it out. And that would be revalued upwards amount of 24,000, which acts as our profit, minus the revalued downwards amount of 2,400, which acts as our loss on devaluation. And this provides the total profit on devaluation to be 24,000 minus 2,400, which is 21,600. Alright, then goodwill was valued at 50,000 and a goodwill account was not to be maintained in the partnership books. Now for the fourth part of this question, we need to explain the meaning of goodwill. So goodwill is basically an intangible asset, and this represents the reputation of the business, which is obviously built up by the partnership, or the value of net assets compared to the value of business as a whole. Let's write it down. Goodwill is an intangible asset which represents the reputation of the business built up by the partnership or this is the difference between value of net assets. Net assets is just the difference between assets and liabilities, and the value of business as a whole. Alright, this concludes the fourth part of this question. Now we can move towards the fifth one. We need to explain why a valuation of goodwill could be made when a partner retires. When a partner retires, goodwill is valued in order to ensure that the retiring partner receives a fair share of the extra value of the business, which is the goodwill. And because the retiring partner has also put on the efforts, it is essential to ensure that he receives a fair share of it. Let's write it down. Valuing goodwill when a partner retires ensures the retiring partner receives a fair share of the extra value the business has acquired through the efforts of that partner. Alright, this concludes the fifth part of this question. Now we can move towards the sixth one. We now need to prepare a statement to show the amount due to Javed on his retirement from the partnership. Okay, we are told to prepare a statement. So rather than preparing the capital account, we will be preparing the very same capital account but in a vertical format. Okay, so we will start with our capital balance, which is to be recorded on the credit side. And remember that all the values that we recorded on the credit side in the capital account is the amount that Javed will receive, right? So this is the value that will receive, and any amount that would be recorded on the debit side would be the value that the Javed needs to pay back to the partnership. So whatever amounts that we recorded on the credit side in the capital account will be recorded as a positive amount, but whatever amount to be recorded on the debit side will be recorded as a negative amount, because this will definitely reduce his capital account balances. Okay, let's start with the capital balance. And we were given the opening capital balance above. Right here for Javed, it's 60,000. So we'll start with this value. Let's write it down. That's 60,000. And then we need to adjust the current account balance because he is retiring. So current account balance. And we already prepared the current account for Javed. Let's have a look above. Right here, the current account balance is on the debit side, and like I said before, this is the amount that Javed needs to pay towards the partnership. So this will definitely reduce his capital account balance, right? So this needs to be recorded as a negative amount in our statement below. Let's do that. That's the amount of 3,953, and since Javed needs to pay this is something to be subtracted. Okay, then we're given additional information. Okay, we already figured out the profit on revaluation, which means that Javed would also receive his share of this profit on revaluation. Let's figure out his share. We know that the profit sharing ratio is 4:3:3 for Faraz, Javed, and Leah. So Javed would receive 3 parts out of 10 parts. So that's 21,600 times 3 out of 10. And this gives the profit on revaluation for Javed to have the value of 6,480. Let's record this, and since this is a profit, this obviously increases his capital account balance, so we need to add it in our statement. That's profit on revaluation, which amounted to 6,480. And if we remember correctly, on our capital account, profit on revaluation is recorded on the credit side, which is to be added in this statement. So you can understand it this way as well. Again, let's have a look above. We were told that Javed would take over the equipment at the value of 13,000. So since he's taking this equipment, he obviously needs to pay this amount back towards the partnership, right? So, and this payment will definitely reduce his capital account balance. So 13,000 is to be recorded as a negative value in our statement under the heading of equipment transfer. So that's equipment transfer with the value of 13,000. And this is a negative value. Alright, then we were also given the amount of goodwill, and Javed needs to receive his share of goodwill, which again is 3 out of 10 parts. So goodwill for Javed would be 50,000 times 3 by 10, which gives us the goodwill value to be 15,000. And this is something that he is going to receive from the partnership. So this definitely increases his capital account balance, which means that this amount of 15,000 should be added in our statement. Let's do that. That is the goodwill with the amount of 15,000. Alright, this concludes everything. Now we can calculate the amount due to Javed. So that's amount due to Javed. And this is the sum of these 5 amounts. 60,000 minus 3,953 plus 6,480 minus 13,000 plus 15,000, which results in the amount due to Javed by the partnership to have the value of 64,527. Alright, this concludes the 6th part of this question. Now we can move towards the 7th one. We are again given additional information. Faraj and Leah continued in partnership, sharing profits and losses equally. Then they discussed how best to finance the amount due to Javed on his retirement from the partnership. They are considering 2 options. So option 1 is to take out a bank loan to cover the amount due, and option 2 is to admit a new partner whose capital contribution would cover the amount due. And for the 7th part of this question, we need to advise the partners which option they should choose by justifying our answer by discussing both options. Alright, so let's discuss option 1. Option 1 considers taking out a bank loan, and we know that bank loan is a temporary source of finance which needs to be repaid in the future. Let's write it down. Temporary source of finance which needs to be repaid. And since we are not admitting new partners, then the remaining 2 partners will share profits between themselves. They do not have to share it among any new partners. Let's write it down. 2 remaining partners will share profits between themselves And thirdly, taking out a bank loan might require collateral. Let's write it down. Bank loan might require collateral. And bank loan also requires interest to be paid, right? So that would definitely reduce the profit. Let's write it down as well. Profits will be reduced for each by interest charges. Alright, now let's move towards discussing option 2. And under option 2, we are admitting new partner whose capital contribution would cover the amount due to Javed. The very first advantage is that new partner may provide new skills and ideas which will improve the performance of the partnership. Let's write it down. New partner may provide new skills and ideas which will improve performance of the business. but this means that the profits will now be shared among 3 partners. Let's write it down. Profits will now be shared by 3 partners. And we know that admitting a new partner would get us additional capital, which is a permanent source of finance, right? Let's write it down as well. Permanent source of finance. So this will not affect our liquidity. So no effect on liquidity. But finding a new partner might be difficult. So may be difficult to find a new partner. Now, based on these factors, we need to advise the partners which option they should choose. So above, we were given the profit for the year to be 31,500. So that would definitely cover the interest charges on the bank loan as well as the repayment amount for that particular bank loan. And this would ensure that the remaining partners will not have to share profits among any new additional partner, right? So due to these reasons, I would advise the partners to go with option 1. Let's write our decision clearly. The partners should choose option 1. And this concludes the 7th part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.